Welcome back. Nigeria's debt repayment now exceeds both recurrent and capital expenditure despite the bloated recurrent spending in the 2024 budget and a significant infrastructure gap. This is alongside the country's foreign direct investment being at an all-time low of under $1 billion. Chief Executive Officer of the CFG Advisory, Tilewa Adebajo, disclosed this while speaking on Nigeria's fiscal environment in an era of monetary policy tightening at the July 2024 edition of the Finance Correspondents Association of Nigeria bi-monthly forum in Lagos. Now, although 8.7 trillion naira was earmarked for capital expenditure in the 2024 budget, infrastructure development will receive just 1.32 trillion naira of this. Adebajo said Nigeria's current debt burden of $130 billion is being serviced by 95% of revenues as debt repayment now exceeds both recurrent and capital expenditure. Now, joining me on the news to discuss this is an Investment and Research Analyst at Meristem Securities Limited, Oyindamola Oyenuga. Hello, Oyindamola. Thank you so much for joining me.
Good morning.
All right,
Thank you for having me.
It's a pleasure, Oyin. Now, with over $100 billion in debt, would you say it is time for Nigeria to seek debt renegotiation?
Okay. I mean, where we currently are is not something that we didn't expect. We've been seeing the signs for, quite a while. Looking at the country's debt, it has risen to, significant levels to about 121 trillion naira. That's as at the first quarter of this year compared to, 97 trillion naira in 2023 full year. And generally, you are seeing that the impact of, higher borrowing, especially from the domestic market, domestic borrowings, and also the impact of FX, right, had major implications on, the debt results that we saw for, Q1 2024. So, I mean, even looking at it, our debt service is extremely high and, constituting about 95% of, the government's revenue. So, I mean, this just points to the fact that there are already significant concerns and the question of, debt sustainability is on the table, right? What's the future of, the country's debt status and what's the way forward? So, in terms of, the question, is a renegotiation currently on the table? If you look at the country's, the debts, what makes up our debt status and constitution generally, we currently don't have, any bonds, especially like Euro bonds maturing this year. That's 2024. We still have up till about 2025 before we start to see maturing bills. We think we have one of about 1.12 billion naira. So that kind of still leaves room for us, for repayments to be made before that time comes up. And also looking at the global markets, the global economy, right now rates are still quite high. Major monetary authorities have, taken on that contractionary stand for quite a long time. But recently we've seen the ECB, cut rates at their last meeting. But generally, we're still seeing that hawkish stance from the global market. So, I mean, with interest rates still remaining, quite high, especially repayment rates are still remaining, quite high. I don't think, right now, a debt renegotiation, is quite, or will I say, reasonable for the government. Looking at, we still have up to like 2025 for maturing bills to occur, and then with interest rates still remaining high, I don't think the concept of debt renegotiation is on the table. Although yes, there are significant concerns about our debt levels rising, very high.
So you're actually talking about the renegotiation now. What impact, do you think this renegotiation could have on Nigeria's credit worthiness? That's if Nigeria decides to even embark on it.
So, a renegotiation on a normal day, right, renegotiation of our debts on a normal day would significantly bring, that negative sentiment towards the economy. I mean, even taking a cue from, Ghana's renegotiation, we saw how that played out for the economy, and they brought out a haircut of about 37% on the country's debt, and we saw how that impacted, investor sentiment towards the economy and towards Ghana bonds generally. So right now, yes, the debt concerns are a lot, and like I mentioned before, I don't think a renegotiation is quite probable for the country right now, especially because of what it implies, right? That negative view towards the economy, and in recent times, this administration, they are doing a lot to try to improve the outlook on the economy, from the monetary stance, from the fiscal authorities, and various aspects of the economy. We have seen that tilt towards trying to improve the outlook on the economy. So I don't think right now that a debt renegotiation is improbable, and if it does happen, right, we know what that brings. I mean, just taking a cue from another African economy like Ghana, it's going to bring a lot of negative sentiments and even implications towards the Nigerian economy. Seeing that it kind of gives that signal that this form of turbulence and impending danger and all that. So generally, that would bring a lot of bad light or sentiments towards the economy.
All right. Well, thank you so much, Oyindamola, for speaking to us on, Nigeria's debt repayment and how it has actually exceeded recurrent and capital expenditure. Thank you for your time.